Hello traders, Day Trader Matt here, eminitradingpit.com, where if you want to trade, you want to learn how to trade, it's a good site. We're having a free course coming up soon. It's going to be permanent on the site, and I think that will help a lot of you out if you're kind of struggling or if you're wanting to learn how to trade. Gives you a good idea of what trading's about and a little bit about my journey that started in 1999. So anyway, let's get into what happened today. So we know that Monday was a holiday here in the US. I don't trade on holidays. Whether they're big holidays or smaller holidays, doesn't really matter. Yesterday was actually a banking holiday, which makes it a larger holiday. So I don't trade on any holidays. But anyway, coming into today, the market was very interesting. It was gapping down a little bit, and that meant that I wanted to be short. Most likely, that's what that means. Whenever the market opens, I kind of take things as they are and, trade what's in front of me. And whenever price came down into this region, I knew that there was a potential that we could have a move back to the upside. And that's what it turned into. I knew it would be not as technical. It would be a little bit more discombobulated. And that's exactly what happened. If you're inside the trading room with me, I usually don't use big words because my focus is on trading and looking for setups, and then afterwards, my attention and focus kind of go elsewhere. But anyway, let's get into what I did today. So the market did gap down and I started looking for a long. So market kind of gapped down a little bit and I just kind of watched this. I didn't really have a bias. It was really just kind of watching. As it came down, I kept watching, and I really kind of wanted to start getting long as I saw price come down here and kind of bounce around and just be really, really choppy. So what I did was I threw in a long at 35.93 half, which was right up here. As price came down, it actually hit it. So I put in that order over here. Price was over here. It was coming down. I was like, okay, I like this order. I'm going to get long. That's usually what happens. I threw in my order. It was actually like right up here. So it didn't get hit here. And then price started to take off. Then as it started coming back down, I was like, okay, there's a chance that it could get hit. If it doesn't get hit, I'm going to pull the order. But if it does get hit, I'm going to write it. So, excuse me, I still have a little congestion over my sickness from last week. So price came down and it hit this level and I got long. I kind of liked it. I saw it coming up and then I saw this massive bounce here. That was very interesting to see. But then price came back down a lot. Well, at that point, I'm like, okay, well, this looks ugly. It's just hideous. If it bounces back up, I'm going to look for a short. And I don't do this a lot, but sometimes I do. So I'm like, okay, I like this area for a short. It was 36.02 quarter. And I'm like, I'm keeping my stop. It was at 94s. My stop was at 94 at this point. My order was at 93 half. So, stop was perfectly okay. It was half a point above. I usually do a quarter point, which I did initially, and then I moved it up another quarter point. So I'm like, okay, at 02 quarter, I'm going to short. I'm going to exit my long, and I'm going to be short. That's what I was wanting to do. Price had moved down into that 97 region. So that's when I placed all this. Price came up. I took my long off the table and I went short. What I do is I take my long off the table and I go short the same amount that I would short normally, but I also take my long off the table. So that's what I do. So that's what I did. I was short at 06 quarters, took that partial profit, and then price just started to drop. that was very interesting. That was very, very interesting to me. It dropped, then it came up a little bit, which was a little bit more than what I was uh, anticipating, what I was expecting. It was a little bit more of a move up, but it did roll back over and started to make lows. So at that point, I was really paying attention to price and just waiting for something to happen. And we made this new low here, but it was a kind of a not a great low, but then price kept moving down and it kept making lows even though it was a little haphazard on that move. So I threw my stop at 87 and got tagged out on that. And we just kind of watched things a little bit. Price came down and then it started to push up again. And I was like, okay, great. This move is good. I want to be short. And then after this, I'm going to reassess the market. So this started to move up. It started looking okay. Over here was when I started thinking that, okay, well, price can come up. It can come up a little bit more than what maybe 30, 40 points ish, whatever. But it might not. So I usually say that as a cautionary statement to the members of the room. Just, I always share my thoughts. I like to share my thoughts, and I think that helps others and it helps me. If you think about your thoughts, that's one way that you hear your thoughts. But if you say your thoughts out loud, you actually hear them internally and externally. I used to have a friend, actually a cousin of mine, used to work for a large tech company, and they would encourage you to think out loud when you have a problem because you never know who's going to overhear you, but also you're getting that extra bit of information. You're saying it out loud, and it could make you think differently than if you're just thinking of it internally. So a little bit of psychology there. It is what it is. Anyway, price came up. As it started pushing higher, I threw in my short. Actually, that's a lie. Price came up here. This was my resistance point. After it came up here, it came down and started to chop around. Then I threw in my short order. I was like, okay, if it comes back up, I'm going to short. That's what I did. At 35.96 half. That's what I did. I shorted there. I took my partial, and then price came down. And then it came up again. And I was like, oh, it looks totally okay. I think it's going to go down again, which it did. And then I threw my stop in at 35.89. And then it came up, it took that out, and it started to rally to the upside. And that's one of the things that I was thinking, that if it was going to go up, it would be a little less technical. It would be basically uglier in the move up than it was on the move down, is what I was thinking. And after I got stopped out there, I just called it a day. I'm like, okay, well, I did stay around for a little bit longer and closed up right in here, because I'm like, okay, we have 3 trades, we're profitable, we're very good, we don't need to stick around. Yeah, the market's probably going to move a little bit, but I'm done trading. Plus, I just got over a sickness, and I think that it's better to take your profits and go home and live to fight another day, rather than to give a little bit back to the markets. You can see here, I had 3 trades. I was 3-0 on my trading, and I pulled 38 points out of the market. Now, what I teach a minimum of 2 contracts per position. I do get a lot of questions about that. So 2 contracts per position. The first contract I take off at 2 points. My stop is 2 points. Okay, is my risk reward hurt because of that? Well, you see my track record. It's not. It's not the best risk reward, but you are day trading. day trading, you don't get the best reward risk. You don't. It's just a fact. If you're swing trading, yeah, your reward to risk can be phenomenal. And that's why I do swing trading. And that's why I added swing trading to the day trade room. So swing trades, I talk about the swing trades. I talk about everything I'm looking at. I email the trade out before I take it, and it's taken. There are a few exceptions to that, and usually that's I just find something that looks good and I take it as a day trade, and sometimes it turns into a swing trade. So that's the only exception to that, but it still gets sent out even though it is set in the day trading room. But most of the swing trades are a little bit of a wider stop, not a lot. So instead of risking $100, you're risking maybe $300, $400, $500, something like that. But you're going for a much larger reward. So that's the difference there. So I take that first contract off at 2 points, like I talked about, and then the next one is a runner, and whatever it turns into. Like this first trade, for example, I got long at 93 half, first profit at 95 half, but then my exit was at 02 quarters. So that was a phenomenal trade. And then I shorted at 02 quarters, took first profit at 0 quarters, and then my next exit was down here at 87. That was phenomenal. That was very, very good. And then this last trade here was probably the worst trade of the day. I shorted at 96 half, profit first target at 94 half, and then 89 was that next take profit area. And I always keep my stop at worst case scenario. Once I go into profit and the first target's taken out, I always move it to plus quarter or 1 tick. You know, 1 tick pays your commission for the contracts that you're in, and you're able to maybe pick up a runner. So that's usually how I trade. If you want a breakdown of how I trade, and I know that over a certain number of trades, that my P&L most likely will be very, very good, assuming I'm taking quality setups. So that's how trading is. You know, it's not trade by trade, like, oh, this trade was bad, it's terrible. That's not how it is. Trading is, you know, you have a win, great. If you have a loss, great. As long as you're taking the good setups, that's great. You know, I like getting losses. I like getting wins. That might sound weird to most people, but I know that over a certain number of trades, that my P&L is going to be very, very good. And you can see that in my trading. I rarely have a losing month or a down month. A down month is what I like to use. I don't really like the terms winning and losing compared to trading, because this is a game of intellect. You know, it's not a game of chance. There's a little bit of chance involved because you're playing probabilities, but there's a way to put so much probabilities in your favor that you have a very good percentage of profit. So a little bit about that. Just wanted to talk about my style, what I do. Wanted to highlight today because today was very, very good. And this is one day, 38 points or $1,900 if you're trading 2 contracts per position. Now, the reason I teach that is 2 contracts I think is the minimum to keep a good enough reward to risk to be able to day trade successfully. And then once you're able to do that, then you can add contracts, because the S&P is a very liquid market. It's the most liquid market outside of foreign exchange as far as like the US is concerned. So you can trade 50 contracts and be okay. But if you don't have the basics down, if you don't have the fundamentals down, and you just start off trading 50 contracts, you can really ruin an account. You can really just give a lot of money away. And if you're going to do that, you might as well do charity. So that's why I teach that. And hopefully it gives you a little bit of insight into me, what I like to do, and how I like to go about things. So anyway, with that, hopefully you got something out of the video. If you did, hit the like button, hit the notification bell so you can hear any of my future videos. Have a great rest of your day. I'll see you around the markets. Take care.